This, I think, also highlights a sort of what I believe is becoming a palpable shift in powers between economies, and there are two gears. So the developed world is possibly dominated by fear, while in the emerging markets, the sense of hopefulness and growing ambitions and confidence. And I wonder whether you believe that at some point the emerging markets centers are actually going to gain in a significant higher position in those rankings. And we have a representative from a really active one.
Actually, when we were talking about opportunities and we talked about products as opportunities, and I was just thinking to myself that it's also new geographies, it's whole new sets of consumers. As economy around the emerging markets grows and the developed markets in most of the products that we're talking about are dealing at levels of close to maturity. I don't see how much reinsurance is going to grow, for example, in Europe. It's a mature market for reinsurance. However, if I go down to, say, Qatar, I'm looking at a country which I think a couple of weeks back by IMF numbers were released, which says it's the richest country in the world on the per capita PPP basis, ahead of Luxembourg. And then I look at their insurance indicators, and the insurance density is approximately around Africa. And you think about how much potential there is. Insurance is growing at a rate of 27%. So you've got a country that's growing at 20% odd every year, and you've got insurance which over the past 10 years is growing at a rate faster than that, and a rate significantly faster than that. And for the financial services firms who are in a variety of these emerging markets which are facing this sort of growth, say in India at 8.5%, Brazil, what they need a lot of help with is managing this growth responsibly. They require expertise, they require skills, they require capital, and that leads to a lot of opportunities for the developed world to grow into and support this kind of growth, which is why I think you've got Brazil, which has got about 3 odd billion reinsurance sector. They've got 90 reinsurers there. You've got the MENA region, which is about $1 trillion economy as a whole. It's got about a 4.5–5 billion odd reinsurance market. We don't have 90 reinsurers there. We don't even have 20. You know?
And I do think there's such an interesting point that you've raised there, which is around what do companies look for? And of course, we're looking for demographics, because you have to follow the demographics. We're looking for GDP growth. You have to follow the GDP growth. So what are the barriers to this? And I think the barriers come down to how open is the market. So what's the trade liberalisation policy? And certainly, Brazil's a wonderful case in point of an economy that's experienced inflation problems and debt problems is now running a simply wonderful public education financial literacy program, wonderful, and yet isn't as open a market, able to take advantages of some of the skills that you were just mentioning. And I think if the world is going to start to grow again, getting past the 1%, 1.5%, then we need to look at trade barriers. We need to look at liberalisation of trade around the world, because that's the one thing that will actually drag the world's growth back down again.
Yeah, and the trade, I think that links back to the points we were making earlier about the global connectedness, and keeping, despite the pressure, open trade. But I think one of the challenges for the established financial centers, we were talking a little bit earlier about innovation, to watch some of the emerging economies and the emerging centers. I mean, in some ways, they've almost benefited from not having had the history that some of us had, because they've just skipped right over. For example, ATM machines, used to be a pretty cool thing. You could walk in and punch in, and technology is very much part of our sector, as it is most financial sectors. The emerging centers, they didn't even, to heck with ATM machines. I mean, they're right into, iPhone banking and whatever, right? And just a whole new world of ease of consumer and business.
For us, obviously, it's many opportunities and challenging opportunities, because you have obviously a very growing economy in those countries, but you also have a population which is getting very more sophisticated in its attitude to money. So you cannot just sell them, bread and butter products. They went to North American universities, they are articulate, they are demanding. So for the industry, it's very challenging to put the best relationship managers in front of those people. The issue for us, for the banking industry in Switzerland, is whether to develop an onshore presence in those countries or to continue to do cross-border business from Switzerland, making sure that we comply with the regulation in those countries. But the opportunities are certainly there because those people are in areas which are maybe geographically or politically not yet fully stable, and hence might be tempted to have part of their assets geographically managed from an area which is obviously more quiet or peaceful. And certainly that's places like Switzerland come to mind when you think of geographic diversification, not just talking about expertise. So that's one aspect where we can take advantage of this new wealth which is being created. Wealthy people, but also affluent people who are looking for financial services. But those people, they made their money in commodities often. And those countries are growing. They need steel, copper, oil. And again, we see those companies moving to places like Switzerland because that's where lots of trading is taking place. So it's an additional indirect impact that we have. And again, the Middle East is providing fantastic hubs in terms of air connections, both to your area, but also to Asia, for instance. And when we look at potential, it's obviously Eastern Europe, it's Middle East, it's Latin America, it's Asia.
You raised a very good point, because of the conversations we have when we talk with the global financial services community is precisely this. So at what point in that learning, in that growth curve, do you think it is essential for you to move from an offshore suitcase banking, if you may, sort of a model, into actually demonstrating the commitment to create that brand, create that awareness, start creating the relationships to participate in that growth over the next years to come? Do you actually really want to be in the position where when you're talking, your predecessors are talking back to you and they're going to be asking you, so please can you explain to me why in 2011, 12, 13 you did not move? Where were you when India was happening and Middle East was happening? And now 10 years down the line you're asking us to go over there, but the brands are established. The time to go in there was not now, it was then. And it's so the amount that you can participate, the amount that you can support, the relationships that are required, the expertise that is required, that'll have to start being built from now. I think another issue that we see very often is that and the Arab Spring has probably not helped at all, because when you think about it, the MENA as a region has always been seen as a capital surplus region. It is a source for capital. It has not really ever been seen as a destination for capital. But if you really think about the world and you think about where you've got growth, and if you put the BRICS out and LATAM out, you only have the MENA left, more or less. And I think it's crucial for us to now start acknowledging the importance of that approximately trillion to 2 trillion, depending upon the definition of MENA. GCC alone is $1 trillion. MENA is more than that. And start thinking about how you can include that region as not a part of EMEA, but Europe plus MENA.
Yes, certainly that's an approach that we take. I'm sure, like others around the table, it's not only our role to attract business in, but also to help organisations develop into other parts of the world, more interesting parts of the world from a growth perspective at the moment anyway. And GCC MENA is such an interesting area. So we do tend to look beyond the BRICS, though I think Russia is always worth a special focus, and who knows.
Well, Moscow's announced they want to have a financial global center in Moscow.
And we're delighted to be helping them achieve that.
Yeah.
The secondment's on its way.
Sorry. It's just because actually makes a good point, though, too, that I think for many of the emerging economies, the relationships that some of the financial institutions had built with them years ago is what's really accounting.
It's a people's business.
It
Still,
is very much.
That makes it interesting. The day it becomes
There are lots of
just a
numbers, but
mathematic,
at the end, it is a people's business.
I can probably add to that. For us, there's also an opportunity in, so for example, a regulatory framework such as the UCITS. And there is a really large opportunity to port the entire framework as the acceptable model for retail asset management across a large part of these emerging markets, which are right now in the hunt of an appropriate, stable regulatory retail environment. And they're thinking of these questions, and UCITS is getting there. You can see it. And I wonder how much that can be used as a model to port regulatory frameworks that are sound, that are supportive to business, and which further sort of demonstrate the advantages of the expertise that exists in Europe to support industry and growth of industry in that part of the world. So yes, of course, there is a way that you can rebuild the wheel, and you can start from the beginning, and these they can take, or they can borrow from the 150 odd years of development. And as we are increasingly seeing, the financial centers are very open to learning from how things are working in the rest of the world, and porting the right models over, such as your iPhone banking. And that probably is another thing which I would wonder how much scope do you see in that being an opportunity?
Well, I think it's certainly true that we've discussed the desire to share and learn from experience in financial services. So from our perspective, trying to identify and then help put in regulatory structures or good practice standards actually helps achieve one of the drags on growth, which is around trade barriers. So the more we liberalise, the more that it's easier to introduce new standards.
So it seems like cooperation is going to be the key word to make sure that financial centers around the world keep on growing and developing. And on this note, I would like to thank all the participants for joining us today, and thank you for watching.